Okay, this is Matt Shaw again, training video number 14, catching swings. Now, this is pretty much about swing trading. Now, you may not have heard of this before, you may have. It's pretty simple. It's nothing drastic like many people think. It's a very risky way of trading. It's like other forms of trading where it can be galvanized in such a way where you can trade it daily, or you can trade it in line with your regular day, and you can go on about your business all fine, which is sort of true with swing trading. Now, preferably you would look at this in with your other day trading. Now, if you're already day trading, that is something of itself. Swing trading is something completely different. Now, swing trading involves holding a position, buy or sell, long or short, overnight, or even for several days, or even for weeks or months. Now, the whole point of that is to catch larger moves, whereas with intraday spot trading, you may only look to make 5 or 6 pips, 10 pips, 15 pips, 20 pips, where you might buy off a certain pivot, rally up, and you just get out. You don't want to hold on any positions overnight. You don't want to risk anything occurring. You may look for these shorter moves, these candles that past a short-term moving average, where you may even only make 10 pips maximum, taking into account your spread. You may only make 6-8 pips. Now, swing trading is catching potential moves right at the turning points when these markets bottom out, or indeed when they top out, or indeed breakouts of consolidations. And I'm going to go through now with you a few examples of this, and one that I'm actually in on now, just on this demo account, for 2 real trades I've got currently running, one on Euro Pound and another on Dollar Chief. But this one I've just made just for this, where I've just caught just back to base here, where I've just got back in. Now, I'll tell you the reason why. Is purely because Dollar Chief. Now, first off, Dollar Swiss, which is what USD CHF, that's Dollar Swiss, okay? Now, this is perfectly primed for fundamental data. This follows on from the last video where we talked about what can affect what currencies and certain fundamental factors that must be factored in, taken into consideration when trading certain pairs. Now, obviously, the events that are ongoing right now, it's the 3rd of October, mass shootings in America again, potential North Korea threats, military, action could be seen at any time. Now, that is, obviously, that could be very bad for the dollar, good for Swiss, because in times of conflict, in times of very bad geopolitical situations, Swiss, the Swiss currency generally does very well. Now, more so than the yen. Again, the yen can have big fallouts in times of certain crisis. And again, obviously, if it includes Japan, like I said before, that can be even worse. So the Swiss currency can be very good indeed. Now, Dollar Swiss, therefore, can be very good to trade in times of turning points and in times of where there's not a lot of actual market activity. All these shootings in the US don't seem to really phase the markets one bit. The equity markets have made all-time highs already, and Dollar Swiss and other dollar-related pairs seem unaffected. So, looking at Dollar Swiss, here is just a current example recently of where the market seems to have bottomed out. I'm going to go back slightly more on a 1-hour chart, and the market has actually bottomed out here just before we saw this spike, 95.83 on the 20th of September, and obviously this was just when dollar saw a nice spike after some good results out back then on the 20th, and it was that non-farm payroll data, wasn't it? Those job numbers, actually, I should say. So that was where the market rallied higher, hedged back lower, held itself. Now, no real confirmation to get in on a trade here. However, when the market sold back off, look at how the market made a candle lower and actually made up a lot of the ground on this one candle. This is a 1-hour candle, it's quite significant, and it made up a lot of ground on this one candle. Over half the candle it made up and actually closed higher by half of that candle on that 1 hour time period. So the market then went on to make a slightly lower low and then rallied from there, and that has shown strength ever since. However, since the market sold back off on the 29th, now this is a good point to make, especially for swing trades. The market has essentially made a higher low, and what is seen by that, since the market rallied up here, so a huge rally, now not necessarily going to get in here purely because this was all our instant fundamental data. The market could have easily just fallen back off as quick as it rallied. But instead, over the subsequent days, markets traded, looked to sell off quite significantly, so a lot of buying power here. However, even if you hadn't got back in on the market there, the market sold off once again. However, it firmed a solid base here on the 29th on the Friday, right here on the 29th. Much higher. It was 30 pips higher than this low seen previous days on the Monday just before. So this shows that the market was willing to sell off, but not as low as it did before, hence a higher low. Very bullish. Now, this spilled over into Monday's trading. The market gapped up higher onto Monday, and it carried on, tried to make one more low there, and rallied up through the moving averages. And again, look at the cluster of the moving average as they all cross through each other, again showing a very, very bullish sign. So for me, this was a good sign purely to get in and ride this wave higher. This second push after this higher low was seen was a nice confirmation here to get in once more. And again, there's a current trend now of where we made a low, a higher low, and again looking to make another higher low again just now in the last 1 hour. And this is why I've highlighted it and wanted to make a quick video and to show you that this will form a base right here. Again, it's also on a pivot, perfect 76.4% pivot, and there. So I got in, bought 2 lots, and going to ride that back higher, because again, it should ride higher back up towards this 98.50 level, maybe come back off to 98, make another higher low, and so on and so on. But this is a good confluence, if you like, of price action. I'm quickly going to go on to euro dollar. Again, right here, the market has indeed broken down through the moving averages till the end of September, rallied up and broken down once more. Now again, this made, what did it make? A lower high. So once it break from here, again, this goes on from the dollar strength seen against dollar chief, a lower high, market absolutely sold off rotten here, tried to rally back above the moving averages and failed, made a lower high, because obviously it's lower than this previous high, and now is rallying down again. And also, just this last 1 to 2 hours made another lower high here. And again, if we look to sell off, only selling pressure can come in down below 117. That's what I believe. So a short would be then seen below the last previous floor of 117.05. Really 117, it's a round figure, as we've said in previous videos. These round figures prove popular, so below 117 would be a perfect selling opportunity. And these are positions you can hold at bigger stop losses and hold for larger periods of time. I'm just going to quickly look at pound yen to wrap up. And again, very, very similar. The market sold off, broke off, consolidated, and again sold off once more. Right on a crucial pivot. Look to get some support here, but again, any breakdown below 149.40 or ideally 149, again a round number. Failed to get back above 150 here on this perfect break. Again, 150 round number. Very much seems like a resistance, doesn't it? This 150 level right here. So any break below now 149 or failure at this level to make another lower high would only be another stretch lower, maybe 100, 150 pips. But again, it's more pips than you would make day trading. And that's how to catch some swings. Very good pointers, and look forward to the next video. Thank you.